As fear grips global markets and headlines turn bearish with the second quarter report, most investors are rushing for the exits. But smart money? It's quietly moving in, positioning itself for what could be one of the most significant wealth shifts in years. As panic spreads, four AI stocks, including Nebius, are breaking out and redefining the rules. One leads in AI infrastructure, another in semiconductor, the third is a hidden gem, while the fourth is quietly dominating chips. Let's break down what's happening and why breakout investors are paying close attention. But first, we're celebrating 1,000 subscribers with a free guide on spotting breakout stocks. Grab it from the description and remember to like, share, and subscribe. This isn't financial advice, just some insight. Always do your research. Let's get started. All right, starting with where momentum meets market opportunity, an AI tech stock, Soundhound AI ticker SOUN, has been on an absolute tear. Just before last week's earnings, we changed our outlook from neutral to bullish, and so far, it's been the right decision. The stock has now increased about 49% since then, closing today at $15.90 after another intense session, climbing 17.3% even as the S&P 500 and Nasdaq slipped. The catalyst is a blowout second quarter. Revenue surged 217% year-over-year to $42.7 million, surpassing Wall Street's $33 million estimate. Losses decreased to 3 cents per share, beating expectations by 40%. Management not only delivered but also raised full-year guidance, now projecting up to $178 million in revenue. CEO Keyvan Mohajer calls it their strongest ever quarter, and CFO Nitesh Sharan says they're moving with speed to capitalize on the growth in conversational AI. So, what exactly does Soundhound AI do? Think Siri or Alexa, but more human. Their technology enables machines to understand natural conversational speech without relying on exact phrases. It's already integrated into cars, restaurant drive-thrus, banking systems, and call centers, helping companies reduce labor costs and accelerate service. With Statista projecting the AI voice recognition market to nearly double from $8.6 billion in 2025 to $15.9 billion by 2030, Soundhound has an exciting future ahead. The model is sticky. Once integrated, clients pay ongoing fees, turning deployments into recurring revenue streams. High-profile names like Chipotle and Casey's are already on board, and new partnerships keep coming. But here's the balance sheet reality. At roughly 38 times this year's expected sales, valuation risk is significant, margins remain modest, and volatility is high. That's why the stock is best suited for investors with a high risk tolerance and a multi-year outlook. From the technical standpoint, SOUN has a 96 RS rating and trades above all key moving averages. Resistance is at $15 to $16, but a breakout could push towards $17 to $18 in the short term, with $20 to $25 possible over the next year if momentum continues. A pullback to $14 to $13.50 might offer a better entry point for patient investors, while staying above $14.50 would indicate ongoing strength. It's speculative, but for those chasing the next big AI growth story, it deserves a spot on the watch list. Here is the big question. What are your short and long-term expectations of this Soundhound AI stock? I will be in the comments. Moving to Nebius Group NV, ticker NBIS, which was born from the non-Russian arm of Yandex, Nebius rebranded in 2024 after a major corporate split. Now based in Amsterdam, the company is heavily focused on developing full-stack AI cloud infrastructure, such as GPU clusters, specialized data centers, developer tools, and vertical SaaS like autonomous vehicles, edtech, and AI data services. Here are the quarterly results that got Wall Street buzzing. Nebius surprised the market in Q2, reporting $105.1 million in revenue, a remarkable 625% year-over-year increase, and a 106% rise quarter-over-quarter. Even better, its core AI infrastructure business achieved positive adjusted EBITDA, indicating lean operations ahead of significant scaling. Based on this strength, Nebius raised its annualized revenue run rate guidance to $900 million, $1.1 billion, a substantial increase from the previous $750 million. $1 billion range. Demand for AI compute capacity remains relentless. Nebius is on track to secure 220 MW of power by year-end and aims for 1 gigawatt by 2026 to support GPU-driven growth. A major private placement raised $700 million from investors, including Nvidia and Excel, highlighting Nebius's credibility and future GPU access. After surpassing expectations in Q2, D.A. Davidson increased its price target to $75, while Goldman Sachs initiated coverage with a buy rating. Reports set target prices from $68 to $90, reflecting growing optimism. NBIS has soared 145% year-to-date and holds a relative strength rating of 98, making it one of the fastest-growing U.S. stocks. However, don't overlook the risks. Its EPS rating is just 9, and volatility remains high, an expected trade-off for a rapidly growing company. Why this matters for investors? Nebius is building a neo-cloud stack tailored for AI, just as demand is rising. With its strategic GPU partnerships, disciplined cost management, and newly secured capital, it signals that AI compute isn't exclusive to tech giants. For long-term investors betting on AI's infrastructure layer, NBIS offers a clear early mover advantage if you're willing to take on near-term risk. Moving to the next stock, cycles can make or break a company in the semiconductor industry. For Micron Technology, ticker MU, the cycle has shifted, and this time, it's not just riding a wave, it's driving the tide. On Monday, Micron gave Wall Street a reason to smile and then some. The Boise-based chipmaker raised its fiscal Q4 revenue outlook to $11.2 billion, up from its previous $10.7 billion estimate, with earnings per share now projected at $2.85, a significant increase from $2.50. Gross margins? Up to 44.5%, driven by improved pricing in DRAM and tight supply in high-bandwidth memory, the ultra-fast data highways that feed Nvidia's AI processors. Micron's role in the AI boom isn't just about selling memory chips. As Chief Business Officer Sumit Sadana said, memory is the foundation of next-generation computing. Without it, GPUs can't function. And with AI adoption expected to speed up over the next 2 to 3 years, the company is strategically positioned to benefit from the upcoming upgrade cycle. Supported by a $200 billion pledge to U.S.-based manufacturing and R&D, Micron isn't just increasing market share. It's aligning with Washington's industrial goals, adding a geopolitical advantage to its technological strength. At roughly 15x forward earnings, and with analysts predicting 600% EPS growth year over year, MU offers a rare combination: AI upside potential without the typical speculative volatility. In a market fixated on the next Nvidia, Micron could quietly become the next essential chip maker for long-term investors. When we last discussed Micron at $109, I mentioned it wasn't just another memory chip stock. It was a coiled spring, waiting for the AI upgrade cycle to ignite the next move upward. Fast forward, and here we are. MU is now trading near $122 after a guidance increase that energized the market and confirmed the bullish setup we highlighted. Technically, the stock has been following a clear uptrend channel since its breakout in May, consistently respecting its 50-day moving average. The move off $109 wasn't random. It occurred right at a support confluence, the bottom of the channel, a previous breakout area, and high volume. That was institutional buying happening openly. Today, MU is approaching the $123 to $125 resistance zone, a level it has tested twice before. If there is a clean breakout above $125 on substantial volume, the next target could be between $135 and $140, a range not seen in over 20 years. For short-term traders, a pullback toward $118, $120 could present a tactical entry point with a tight stop below $115. For long-term investors, the narrative remains unchanged. The AI infrastructure surge is still in its early stages, and Micron's involvement in high-bandwidth memory HBM positions it as one of the clearest bets on that trend. However, the market is finally catching up to Micron's fundamentals, but the chart says there's still more room to run, especially if AI demand accelerates into 2026 like management expects. What is your take on this stock? The following stock has shifted from being a geopolitical underdog to a supply chain power player, MP Materials Corp. In our previous videos on this stock, trading around $35, $50, we highlighted this company ticker MP as the U.S. rare earth ace in a geopolitical game of chess, each word filled with strategic urgency. Today, the board is tilting even further in its favor. Let's talk numbers first. Quarter 2 revenue came in at $57.4 million, soaring 84% year over year, powered by NdPr production jumping 119% to 597 metric tons. The adjusted loss per share narrowed to 13 cents, beating expectations of a 19-cent loss. Those results triggered a double-digit post-market rally and brought MP closer to its 52-week high of around $79. Technically, MP has gained over 350% year-to-date, outperforming nearly all major sector benchmarks. The charts show a textbook breakout from a long-term base. Recent trading between $72 and $80 is now the new battleground. A sustained move above $80 would suggest further gains toward the $90, $100 range, assuming volume and momentum persist. On the fundamentals front, the Department of Defense just became MP's largest shareholder, committing $400 million in equity, up to $350 million more in staged funding, and a $150 million loan to support its 10X magnet facility. Plus, Apple is investing $500 million in domestic magnet supply and recycling partnerships. MP Materials is not just commercial wins, but strategic bulwarks. Let that sink in. A downgrade that still adds $20 to the target. The takeaway for forward-looking investors? MP is becoming a key player in defense and an indicator of national security. The mix of government support, Apple's supplier agreement, and rising production and profit margins makes it a rare gem in the materials sector. For long-term strategic investors, MP could become one of the most important holdings in an AI and energy security-focused portfolio. If the chart breaks above $80, we might see the next phase of this remarkable run. Which of these 4 AI stocks are you watching closely? Let me know in the comments below. Remember this for information and educational purposes only. Investing involves risk.